We're ready to kick off our next webinar on automated revenue management, improving compliance and confidence. My name is Kate Barr, and I'm the Director of Marketing Communications at BillingPlatform, and I want to thank everyone for taking the time out of your day to join us. Just a little housekeeping before we start. Only our presenters' microphones are live. All attendees are muted to block out any background noise that may come through. At the end of the broadcast, we'll have a live Q&A session, so as questions come up, please use the webinar sidebar to ask them. During today's webcast, we're going to discuss something that is top of mind for the accounts receivable team: recognizing revenue while maintaining compliance. With the rise of subscription and usage-based pricing models, accurate accounting of earned and deferred revenue is critical to ensuring your company runs smoothly. But doing that isn't always easy if you're relying on manual processes. So today, we'll detail the benefits of a single system to automate billing events and what we've learned from our customer base who are successfully using revenue recognition. First, I'd like to take a moment to introduce today's presenters. We have Mary Christensen, who leads product marketing at BillingPlatform, the industry-leading cloud-based platform that enables enterprises to monetize any billing model and satisfy any business requirement. With over 20 years' experience in billing and customer care, Mary has held various roles at Amdocs, Converse, and CSG in product marketing, product management, and operations. We also have Alejandro Armelles with us, who is the Senior Product Manager responsible for BillingPlatform's revenue recognition module, meant to help companies automate their revenue recognition processes while increasing their accuracy. Alejandro has several years of experience in the finance and accounting arena, with special focus on the banking and telecommunications industry. We're thrilled to have Mary and Alejandro share their insight with us and are looking forward to a great discussion today. And with that, Mary, I'm going to turn it over to you to get us started.
Thanks, Kate. So let's level set. Alejandro, what is revenue recognition and why is it an important topic to discuss?
So that's a really good question, Mary. One of the things that we hear from customers that might not be too involved with the accounting process is that they don't understand why they can just take the cash that a customer gives them and recognize that as revenue. What they don't see, and many people in accounting are starting to see now, is that there's a set of rules that you need to follow that determine when and how you can recognize that cash as the revenue of the company. Just because you have the cash from the customer in your pocket doesn't mean that that's your revenue to recognize. You actually need to wait until certain events and circumstances have happened. And that's why we need some kind of help for companies to automate those processes, since it's not something that it can be done so easily out of the box.
That does sound complicated, but from what I understand, automating revenue recognition is one of the keys to helping customers solve those problems. Can you talk a little bit about why automation is so important?
Sure. First of all, the rules that accountants have to follow are not straightforward, right? Like you have different rules that apply to different type of products, depending on how the contract that the party signed was written, might determine how you can recognize the same revenue. So even though the transaction might look the same, if the contract has a different language, the way you recognize the revenue is going to have to be different. Given that complexity, you can either have a person is reviewing every single contract every single time and trying to figure out, well, how we need to account for this, or you can automate that process by determining, well, how you're going to deal with certain situations, and then as contracts come in that might combine different situations, the rules that you have set up in place will automate that process and recognize it according to your own estimations at the beginning of the process. Timing of recognition is another one that requires some automation. If not, keep in mind that just because as I said before, just because you got the cash doesn't mean that you can recognize that as revenue right away. Sometimes you need to wait for a future event to happen. So if you then automate that process, what you're going to have to do is to spend one person's time just checking for that event. Once that event happens, they need to get some kind of communication informing them that the event happened, and then they have to go into the GL and make the entries. We can automate that by simply saying, all right, when that event happened, there's going to be some change in the system that will trigger all the entries that should have been done by that person. The combination of those two, as you can see, gives a lot of time and cost savings to the company. You need to have a person that's reviewing every single contract every single time a new contract is signed. You already determine at the beginning of the process, at the beginning of the implementation of the module, how each situation is going to be handled. And secondly, you need to have one person reviewing the events that might affect a contract every single day. Whenever one of those events happen, the system will automatically retrieve those events and create the journal entries according to your rules. That reduces the amount of time you need to spend on that and reduces the amount of people that need to be working on revenue recognition and let them focus on other stuff that are way more important for the company.
Those sound like really important benefits for automating the solution. So I know that we have a number of customers using our revenue recognition module today. Can you talk about a few unique ways that they're using our solution to help recognize their revenue?
One of the most complex scenarios that not many people realize the implications is when you have contracts that combine different performance obligations. So performance obligations are basically a service or a product that you as a company have to provide to your client. So we may have a contract that's combining the delivery of a piece of hardware plus the provision of a service. People assume, well, I'm just getting paid 200 for the hardware and 100 for the service. I will recognize 200 for the hardware and 100 for the service. Well, not exactly, right? The new rules actually force you to go through a process that is called the allocation of revenue based on the standalone selling price of those two services. Basically, what you do as a company is that you need to determine, am I charging the real value of that product and that service? Are there any embedded discounts in the bundled price that I gave to my customer? And if so, I will need to rearrange the money so the 300 I'm getting in total is split in a way that represents the real value of the hardware and the service separately. So that's one of the examples that we've seen our customers having to rely on our module to be able to handle it, since otherwise they will have to create Excel spreadsheets, which at some point becomes impossible to manage, especially when you have a lot of contracts coming in every day. Other ways that we've seen our clients using it is milestones and triggered events. So in those situations, and I mentioned those before, sometimes you know how much money you're going to recognize, you just don't know when, right? Because you're waiting for something to happen. Maybe you're waiting for a delivery that needs to happen before you can recognize that revenue. Maybe you're waiting to reach certain stages in a building project before you can recognize that revenue. So you don't know when's that going to happen. You only know the amount that you're going to recognize. Well, instead of having one person reviewing those events every day, or having some kind of report that needs to be spit out and then a person needs to review it, we can automate that process, and the customers have done it. So whenever that event happens, there's going to be a change in the system that will automatically trigger all the entries that we knew from the beginning we had to make. We just didn't know when. And thirdly, would be point in time and recognition of the time. That's a split. That's the different ways that you can recognize revenue according to the new revenue recognition standards. So you can either recognize a certain amount of money on a specific date, or you can take that money and that revenue and spread it out during a certain period of time. That applies specifically to subscriptions. For example, if you get a subscription for a whole year, or an annual subscription, you cannot take the money from the customer and recognize that as revenue on day one. You're going to have to split that revenue during the whole year, right? So every day you're recognizing, or every month you're recognizing the revenue according to the number of days of service that you provided that month. That's something that, once again, you could have someone trying to figure out an Excel spreadsheet, and maybe you only have 1 or 2 contracts that deal with those kind of products. That's a way that's feasible. But in most scenarios, our customers have thousands or hundreds of thousands of contracts coming in that need to be addressed, and they cannot spend the time of someone or a whole team reviewing those contracts, even if they could group them somehow in an Excel spreadsheet. So those are the main ways that we've seen our customers using our tool, and some of the challenges they had to overcome, and that's why they had to get a separate model to handle this.
That makes sense, and really you explained very well why automation is such a critical component of that. What other factors in the market drive the need for an automated revenue management solution?
Most important one is the rules, right? We got a change in accounting rules a couple of years ago. Before, there was a better connection, for lack of a better word, between the products and the charges that those products were generating for our customers. So, for example, if you sold a hardware and software, going back to my previous example of hardware and service, the amount that you charge for each one of those two, for the product and the service, would be the amount that you would recognize for each one of them separately. That changed with the new standards, which increases complexity and requires either more manpower to handle it, or B, a tool that can help you with that without having to spend extra resources on it. Second, contract complexity. The more complex a contract is, and by that I'm not talking only about hardware and software. I'm talking, you can add, well, depending on me reaching certain goals, I'm gonna charge you this much, or maybe I'll charge you less. I'm also giving you a discount for future products, maybe I'm allowing you to upgrade or downgrade mid-contract. Those little clauses in a contract that maybe people see as normal actually require a lot of work when it comes to translate that into accounting terms. The moment you can start upgrading and downgrading someone, that means that you need to deal with contract modifications. The moment that you can say, well, depending on certain goals, I might charge you this, I might charge you A or B, you need to start dealing with variable consideration. There's certain aspects of a contract that we do not realize when we're signing or writing those contracts, how they're going to translate into accounting terms. And that's why we need something, either a whole team of people that are going to be reviewing those contracts one by one, determine, oh yeah, we need to apply this guidance to this portion of the contract and this guidance to this other portion of the contract. Or we can have a tool, basically a platform that will handle that for us. So once we determine how we want to deal with each one of those clauses or type of clause at the beginning of the life of the product, any contract that comes later on and any combination of clauses that we might see later on will be automatically handled by the system. Third point, volumes. Even if your contracts are not too complex, even if you could handle them using a spreadsheet and you're confident that you will be able to do it like that in the future, the moment you start adding volume to your contracts, and the moment you start adding hundreds, thousands of contracts every day that might be changed, might be modified at some point, that's something that you cannot handle just using standard spreadsheet tools, right? You need someone, well, not someone, you need something that can do that for you as soon as information comes in and changes the recognition of the revenue from that contract on the fly. You cannot wait at the end of the month because by then the volume will be too high, and you're risking making mistakes in the process. Which takes me to my last point, auditability. Whenever you get a person involved, right, there's always a risk of certain mistakes happening. Also, whenever you start using spreadsheets, there's always a certain risk that the spreadsheet is going to be misplaced, or it's not going to save correctly, or maybe a file might get corrupted. Once you start using a system that has several backups around the world, right, to make sure that every single change that you've done to a contract is stored somewhere, to make sure that every single rule that was applied, every single revenue recognition rule that was applied to a contract can be audited later on, and you can see exactly how the rule was applied, you're increasing the confidence that your numbers are correct. Also, when auditors come in, they're going to trust way more whenever you can show them a system that can handle huge volume of contracts coming in, a huge volume of contract modifications coming in, and a huge volume of complex contracts coming in. Then when you tell them, no, I have a team of people dealing with spreadsheets and they handle this contract separately, right? So those are probably the main 4 points that we've seen that drive this push toward automation when it comes to revenue recognition.
Right. And all of that information that you're talking about coming in from the contracts or the volumes and being able to audit the solution, that really tells me that there's a need to have a revenue recognition solution very embedded into a billing solution. Can you tell us what some of those benefits of having the two-in-one solution are?
Yeah, absolutely. And actually, I'm glad we're talking about this, because we've seen in the past years, there was a push, like new companies were coming out with the revenue recognition modules that were not really part of anything. They were not part of the billing systems or anything like that. And now we're seeing the opposite push, like actually companies that had those revenue recognition models are trying to integrate with natively with certain billing systems. And that's just because they realize that that's the way to go, right? Main benefit that we see is that you have one system of record. The moment that you are combining both steps, the billing of the services, and then how you represent that billing, how you recognize that revenue later on the GL, you need to move data from one system to another, right? If you combine that in just one place, the movement is seamless. There's no really movement at all. You're using the same data structures for both processes. You can make sure that whenever an invoice is sent, your revenue recognition software is going to see that invoice being sent on real time. If you have to split that and use two different platforms to handle one billing and the other one revenue recognition, there's going to be some delays. There's going to be some data that gets missed in the middle, right? Which takes me to my second point. There's no additional integrations. You're splitting the systems. You need something, some kind of layer in between that can take the data from the billing system into the revenue recognition system. The moment that you combine those two, you don't need that anymore. Like, there's no translation. There's no pushing data anywhere. There's no risk of losing data in the process. There's no risk of what if one of the systems changes its data structure. Now you need to change that layer in the middle that is going to translate and send information from one system to another. No, like if you combine those two, you won't have to do that, because any change that happens on the platform, it happens on both systems at the same time. Therefore, there's nothing that you as a user have to do to adapt one module to the behavior of the other. Third one, that's something that some people don't realize the advantages when they're looking for revenue recognition models, since they haven't gotten to that step yet in their heads. But whenever you need to learn a new system, that's time that you need to spend on training your guys, being able to deal with that new system. Also, whenever there's some kind of rotation in the team, that increases the time it takes for a new person to learn the job. So if you can combine those two systems and you turn into just one simple UI where you can run different processes at the same time, you're reducing the amount of training time for existing employees, you're reducing the amount of training time for new employees, and you allow that a whole team might handle several processes at the same time, since they're all familiar with that same infrastructure that they're using for each one of the processes. And lastly, changes managed in one place. I touched on it before. Whenever there's a change on how one system is structuring their data, that might lead to changes on integration that you have to do, right? But it's not only that, it's what if you change, it's a business change. You're changing how a product is marketed. Now you need to go to two different systems, the billing system and the revenue recognition system, input those changes and make sure that the revenue recognition rules are applied correctly. Why not simplifying that? You just have a system that does both things. You only need to input your changes in one place, and the changes will flow naturally downstream into the revenue recognition model.
I mean, we started off by talking about the fact that manual processes create issues to recognizing revenue appropriately, but all of these issues, right, one system of record, no additional integrations, same user interface, and making changes on one place are really critical to round out that process to avoid those issues altogether. So yeah, it makes sense to have them in the same system. So we have a number of customers actually using our revenue recognition. Can you talk about some of the success stories that they've achieved by using our module?
Yeah, so one theme that we've heard pretty often from our customers is that this revenue recognition model that we have is set it and forget it, right? You go at the beginning of the integration process, you're going through all your contracts, you determine, all right, this is the issues I handle in my contract, this is how I want to handle it in the future. So later on, whenever you get a contract that either matches one of your contracts or it doesn't match, it simply uses a combination of clauses from other contracts, the system will automatically know how to deal with that. And that's a step that might feel, oh, I need to go through all this analysis. Well, actually the accounting standards already tell you that you have to go through that analysis. You need to go through your contracts. You need to evaluate how your contracts are written, how the revenue should be recognized, and then you need to write down basically your policies, your accounting policies for your company, and you need to make sure that those policies are followed whenever a new contract comes in. What we're doing here is we're using that same step that you need to take no matter what, and we're making sure that once you write down those policies, which in our world end up being revenue recognition rules, the system will follow them to the letter, right? You won't need to have a person that's going to have to reach out to those policies and determine, well, for this specific contract, I need to follow this rule for this part of the contract and this other rule for this part of the contract. The system already is doing that for you. And it's not extra work. It's the same where you would have to do anyway of going through your contracts, doing that evaluation. Now you're just simply putting the result of that evaluation in the system, so the system will follow it forever. Second thing that we've heard from our customers really simplifies contract modifications. As I mentioned before, sometimes you don't feel your contract is complex at all, right? It's a standard contract. The customers pay me $10 for a service, for some service that we're providing. But we don't realize that there's certain clauses in our contract that allow customers to upgrade or downgrade with certain discounts, for example. Those are called contract modifications. Those can be extremely complex to handle, right? You can try to do in Excel, and you can probably do it if you only have to deal with a few contracts. However, when volume starts to go up and when modifications go in different ways, like maybe you have 1,000 customers that are upgrading, plus 500 that are downgrading, plus 250 that are doing some kind of weird mix, upgrading certain services and upgrading certain services. That's something that our system can do for you. You don't need to put your customers in buckets and try to get some kind of adjusted number that that is kind of close to the real number that you should input. No, the system will be able to handle each customer independently. The system will be able to handle the adjustments that you need to make for each customer independently, and you just need to sit down and let the system work, and that way your accountants can be focused on something that is more important for the company. And lastly, automatic calculations. I know that seems obvious, right? We were talking about automating, but there's another piece here that is not necessarily linked only to revenue recognition. It's also it's linked to internal reporting. So for customers, they do allocations internally. That means that they need to determine, what revenue has to be recognized each month, for example, but they also need to know, okay, internally, I want to allocate this revenue to X departments within the company. Those calculations is something that not that many revenue recognition models can do, because it goes out of what standard revenue recognition process is, but they're done by companies. They have teams of people doing that kind of work, and what we're doing is automating those calculations as well. We're determining not only what the revenue should be and when it should be recognized, but also helping them doing those internal allocations that they do for internal reporting purposes.
Great, thanks, Alejandro. That's really good information. I'm going to turn over to Kate now. I think we got a few questions from the audience. Kate, you want to run through those?
Absolutely. We've got a few that have come in. So just a reminder, feel free to use the chat feature in the webinar if you'd like to ask any questions to our experts. The first one that I've got is, how is a standard use case of hardware and service handled by the platform?
Okay, good question. Yeah, I mentioned before. So for the way our platform would do it, and remember our platform can handle anything from billing through revenue recognition. We have CPQ now as well. The way we do it is the order will come in with the product and the service, right? We'll create the invoice for the customer and send it to the customer after the invoice is approved, and then the system automatically will go and look at those products, determine that those two products are two different performance obligations, part of the same revenue recognition contract. We'll take the cost of each one of those elements, the product and the service, and it will split that cost. It will add it up and split using the guidance from ASC 606 or IFRS 15 between the two products based on their actual standalone selling value. As I said before, it used to be that the amount that we charge for a product was the amount that we were going to be able to recognize as revenue later on. That's not the case anymore, at least not in most scenarios. Now you have to do this exercise of determining what's the real value of the services and products I'm providing, what's the total amount of money I'm getting for that contract, including all those products and services, and then allocate that money between the products and services based on that value. So our system will handle all that from the beginning. Like, you create the quote to the customer, then you're going to create the invoice. The system will do everything after that. It will send the invoice to the customer, charge the customer if you have some kind of auto pay system in place, enabling the platform. It will then calculate the GL entries for that same contract, and it will put them in the GL for you.
Wonderful. Thank you for that answer. The next question that we have is, can you incorporate data from other or multiple systems?
Yes, we do. You can. So we have actually for event and milestone recognition that we talked briefly about before. So those normally come from some other system that the customer has. They will have some kind of shipping software or some delivery software that manages when a package was delivered, for example. What those systems do is whenever the event happens, they send a message to the BillingPlatform. All this is done automatically, of course, and BillingPlatform will retrieve that information, and based on that, will trigger the journal entries. We also do, and that goes back to my allocations, internal allocations, that example I was talking about before. We might get information from other systems that determine how we're going to do those internal allocations. So some customers, they just split them based on some kind of billing data that we already have in our system, but others don't, and they use inputs from other systems that they have in the company. So what we do is we retrieve that information, and we using that data, we do all the calculations that we need to either recognize revenue or to simply do internal allocations. So yeah, short answer to your question is yes, we can incorporate data from other or multiple systems.
Perfect. That's great to hear. The next question that we have is, we have operations in multiple countries. Does the system manage multiple books?
Yes, it does. Yes, it does. We can manage entries in different currencies, and also you can have two parallel set of books. That we've seen that with some customers that maybe they need to report in IFRS and then some kind of local GAAP, and they need to follow both. So that was the use case that we encountered, and of course we wanted to be able to serve it. So yes, you can do it. We have these things called attributes that we can add to our entries, and based on that, you can have parallel entries running for the same events and make sure that you don't treat them as just one book, but two different ones. Another example I'm thinking about right now, we have customers that after the change in the accounting regulations here in the U.S., when we went from ASC 605 to ASC 606, they still wanted to report internally the numbers using the old guidance because they thought it was easier to understand for executives and whatnot. So what we're letting them do is to record the information in 605 and then create the adjustment on 606 that they can then keep separate on their books. So for internal reporting, they can just use the entries on 605. However, when it comes to actual entries that need to go to the ledger, they will use the entries in 605 plus the adjustments, which ends up being 606.
Perfect. Thank you very much. We've got time for one more question, it looks like. So this one is looking for a little bit of insight. What are you planning for the product this year?
We have some new stuff coming up this summer. First of all, we wanted to simplify some of the revenue recognition rules that we have. So our mantra has always been give the maximum flexibility possible to our customers. That means that we give them a lot of options when setting up those rules. However, we've seen that there's certain rules that are pretty standard that most of our customers are structuring the same way. So we want to make sure that it's easy for a user to set those up without having to go through all the options that we're giving them. Some kind of simplified way of setting up some of those revenue rules without losing the option to make them more complex if you need to. Another enhancement we're working on is certain changes on the UI. We want to be able to give a better visibility into what the rev contract is looking like at any point in time. We have stuff right now that already gives you all the information that you need, especially for reporting. But we're thinking, why not keep improving on that same base? And since we have the complexity, now we need to make sure that we can show in a simplified manner to our users, so the complexity in the backend doesn't stop them from getting the deepest level of understanding of what's happening.
Wonderful. Thank you very much. It looks like that's all that we've got for questions, so I'm going to take this opportunity to wrap up today's broadcast. I just want to thank everyone for joining us and fostering a great discussion with our experts. And thank you, of course, to Mary and Alejandro for sharing your insight with our viewers. A recording of this broadcast will be available in our Bright Talk channel as well as on the BillingPlatform website. So you can reference back to it as often as you'd like, or feel free to share it with other colleagues who weren't able to join today. One other thing to keep in touch for future BillingPlatform webinars, updates, and just general knowledge in the billing space, feel free to follow us on Twitter and LinkedIn. And of course, if you have any other questions, please don't hesitate to reach out to us. We've got our email address right there for you on the screen, and we'll be sure to get you an answer right away. Thank you again for joining us, and have a great day.